in trading major fundamental events. For this series, please confirm to me that you can hear me fine, and we continue right away. It would be great to hear or read your questions in chat, so please leave your questions in the box. So we are digging just in the ECB announcement. Let me introduce you to the online charting. It seems that there is no immediate market reaction, as we are seeing by far. Euro-dollar moved just few pips from the previous candle, trading at 1.1322. Let me know what's your experience with the ECB rate decision by far. Are you involved in any active trading at the moment, or just staying idle and watching market activity for the upcoming trading decisions? Okay, great. Looking to short euro-dollar. I'm opening the chart at the moment, so we can evaluate if that's a good idea or not. So by far we are seeing that the market volatility is low, and that basically means that we can use our time until more important conference that's going to happen in just 40 minutes, so we can understand what are the major factors that we need to cover during the upcoming press conference. So for the ECB rate decision, ECB has just announced that its main rate remains at historical low of 500%, which remains unchanged since September 2014. As you can clearly see, the market reaction is minimal to the no change in policy, and that means that main attention would go to that means that main attention would go to the upcoming press conference. But before we start discussing what would be in the spotlight for the press conference itself, let's check what the economic background for Euro and the European Union in recent months. As you know, central bankers are following closely major economic data releases that are due on monthly basis. And if you were following fundamental agenda for the European Monetary Union, the recent data were quite dissatisfying. For instance, producer price index is minus 0.26% year-on-year, minus 0.8% month-on-month, and consumer price index is minus 0.1% year-on-year, and just above zero on a monthly comparison basis. These two indicators are a good display for the inflation. As you know, the target inflation for the euro area is set at 2% rate, and in the beginning of the year we have been expecting that the announced QE program with additional asset purchasing from the central bank would support the rise in inflation rate for the euro. As you can see, the attempts to make inflation better were not confirmed. So we are going further to market PMI. The composite type of index showed decline in comparison to the previous months, 53.6% versus 53.9. ZEW survey that was conducted in the beginning of October has also declined, and overall the picture is quite depressing, as Monk's one. So the trade balance finally has experienced another decline from the previous value of 22.4 billion euros down to 19.8 billion euros. If you sum up all the major economic data from the EU in recent months, you can clearly see that the fundamental picture for the euro is negative. And the main idea I would like to highlight in this section is that unfortunately the action proposal from ECB to boost inflation with the quantitative easing program didn't work well. As we see, both producer and consumer price index is declining on year-on-year basis, and we are seeing no positive tendency in this relation. So this is definitely a topic to follow. The question that many fundamental analysts are putting in front of themselves is if the QE is actually working. The quantitative easing program conducted by European Central Bank started in March 2015 and is due to September 2016. Current monthly volume of asset purchases is set at 60 billion euros, and it is mainly purposed to buy government bonds. Any change in QE policy is considered quite unlikely. So if we see during the conference that ECB is highlighting any ideas regarding changes in QE, that would be definitely a strong signal. So I'm making another attempt to organize screen share so we can go through the euro-dollar chart. Yeah, hopefully it's gonna work fine this time, or maybe not. So, as highlighted below, the main focus is going to be conducted in the upcoming press conference where ECB President Mario Draghi would be questioned on the comments and details regarding monetary policy. So let's discuss now in short what are the probable reactions and main messages from him. Clearly, the current sentiment for Draghi speeches is very dovish, which means that Oh, it's finally working. I'm very happy for that. So in recent months, the ECB sentiment has been quite dovish, and that's been translated into wordings as being ready to act in case the um, fundamental picture would ask for such activities. But if we hear such a wording formula, like ECB is standing ready to act, that's clearly not enough stimulus to be considered by the markets as a serious one. In case we don't see changes in the sentiment from the Draghi's conference, would likely mean a disappointing and bearish pressure for the euro. Definitely the most interesting probability for the euro perspective is highlight some hints on the upcoming changes in the QE policy. Basically, ECB can make two major changes. The first one is a change in the interest rates. That option is clearly off from the table at the moment, as euro area is experiencing market inflation pressure, so it's not the time to raise the rates. At the same time, the deposit rate has declined to a negative rate already, so declining further would be rather radical step, and it seems that by far European central bankers have confirmed that this policy is not working really efficiently. Then the other option is changes as marked in the previous slide. The current volume of asset purchases is 60 billion euros on monthly basis. So the likely expected change in QE policy is further stimulus, which means that ECB would add a bigger amount of volume, which is artificially injected in the economy. In the beginning of this week, Mr. Novotny, the bank governor of Austrian National Bank, has commented that with the current lowest possible level of inflation, which is far from the target of the ECB, central bank may need to loosen fiscal policies to increase growth perspective, which could be translated by market commentators that ECB is expected to actually announce further market stimulus. Let's see if it's likely to expect that ECB is going to announce quantitative easing right at the upcoming press conference. As we have already received major text statement update from the ECB. I didn't find this change in the ECB commentary. It's quite unlikely that this change is going to be dated with today. Yet Mario Draghi, the president for ECB, may use this press conference to highlight a more exact timing for the following monetary policy change, and that's highlighted in the presentation as a clear timing point. For instance, if Mario Draghi would say that the changes in QE, that means additional stimulus injected in the economy each month, is going to happen this year, that would basically lead us to the December meeting, as we have only one meeting left with the upcoming ECB press conference and market update. So that would be clear timing and clear signal that could be that could bring a bigger market volatility. Finally, the third point, which is basically off the table already, as we have received this announcement, is a change in policy immediately. But if it's done so, that would bring immediate shocking effect to the market. Now I'm going to switch to the charts so we can discuss what are the short-term perspective for the euro-dollar currency pair. Please confirm to me that you are seeing euro-dollar on a weekly time frame, and then we would be able to continue right away. So starting with deducting method, just to be sure it's everything. Yeah, things like this. Okay, back for the chart. So I'm sharing the weekly time frame from Euro USD, and we start with the weekly time frame. Please find blue dashed line, which starts from historical low of 0.80. This line has worked several times this year, since March, when euro has been experiencing multi-year lows, and recently has worked as a dynamic support at level 1.0815, and is currently projecting the resistance at 1.0830. So currently we are 500 pips away from this point, so it's quite unlikely that we are going to reach it in the coming months. But in case we are going to see a further market stimulus and the euro declines, that's definitely a key point to watch. On daily time frame, please find highlighted static area between levels of 1.1380 and 1.1430, which is marked as confirmed historical static resistance zone during May 2015, September 2015, and earlier February 2015. As we can see ahead of the event on 15th, 16th of October, euro-dollar has again tested this static level and retraced from it. So that is converted to the understanding that we are having 1.1380 terminal resistance, and more importantly 1.1430 resistance on the daily chart. Let me mark it for reference in the chat. So these are current resistance level, which are quite obvious from the daily chart. On the other hand, on the daily chart, I would like to highlight 1.1015 dynamic support. that's been projected with the descending green trend line, which starts with the May 2014 top 1.3993 and is projected through the full high of July 2014 1.3701. Currently, this area is projected at the area of 1.1050, and that's going to be one of the major support levels. Let's go further to see what are the possible static supports ahead of this level. Currently, we are displaying a 4-hour chart. Let me zoom out it a little so you can see it in a better perspective. So the first area to watch, once again, 1.1050 discussed just before, and it's supported with the ascending trend line, which connects to local low levels back from March, April 2015. But ahead of these levels, there is also a clear support level at 1.11, which connects multiple barrier zones starting from May 2015 through June, July, August, and September. Basically, Euro-dollar has used this area every month throughout last half year. And in case of strong announcement, 1.11 is definitely area to watch. Going further to hourly time frame, let me know in chat once you've got some questions. Okay, quite obvious that hourly chart needs some update as the market signals are more volatile there. The recent signal support line has been broken today ahead of ECB meeting. And is providing short-term dynamic resistance around 1.1360 area. Once again, static resistance zone at 1.1380 is confirmed on the chart, so we can remind ourselves on it. More importantly, we are having another support line which connects for September 23rd and 25th, starting from 1.1102, projected through 1.1114, with the current level of 1.1215, 1.1220, and that's the clearly the right level to watch during the possible decline of the euro. Another important short-term resistance line based in 1.1280, which is quite close to current pricing for euro-dollar currency pair. And in case we'll have some bold market reaction, it's unlikely that this level would make a big difference. On the upside, after 1.1380 is tested and probably broken, we could expect that we are going to retest 1.1430 static resistance area, and After that, we are coming up to the retest of the local high for October 15th, 1.149. I'm not sure if intraday chart is able to provide some actual insights ahead of such volatile event as ECB press conference. Clearly, it's just replicating the data that we have sourced from hourly time frame. So I suggest return it. Let's do a short drop up so you're able to evaluate key points from the technical point of view ahead of the conference. So to closest level for resistance, I name a key short-term resistance are 1.1380 and 1.1430. Key short-term supports are situated at 1.1220 and 1.11 exactly. In case we are above resistances, we are going to test 1.15 local high level. That's 190 pips away from the current market pricing. If we are going to reach 1.11, that would be 210 pips distance from the current trading range. So Rob, thanks for commenting. I see you've got sell orders on euro dollar 1.1450, 1.1560, and 1.1640. I would say that it's best to evaluate your orders on bigger time frame, for instance, daily. What's your relevant duration of the trade? Seems like you're not a short-term trading, rather a swing trader. How long do you expect to such position? Very good, no doubt in your experience. I'm asking about the expected duration for the trades. So 15 minutes ahead of conference. Yeah, I agree with you that it clearly depends on the sentiment that he's going to during the event. I'm not sure how dependent we are on the journalists who are present on the upcoming press conference, but it seems quite likely that they are going to ask everything that's needed for the market participants. So if I get you correctly, your upcoming expectation is that market is going to rise quickly and then retrace back and send the euro down from your selected targets. Clearly, thanks for suggesting, Rob. That's one of the points that I would like to highlight and discuss ahead of start of press conference. So you can start watching it fully prepared. Please beware of different immediate and objective market reaction. As we have discussed earlier when when describing fundamental data related to economic union, it seems from the fundamental perspective that no change in policy is considered as bad for euro and may send the currency down. At the same time, the desirable move from the ECB is growing rate of inflation, which is they're wanting to reach target 2% regarding inflation, and in order to achieve this, they need to make additional stimulus. So what I'm leading to is that the presentation or the highlight of the upcoming expansion of QE would make the euro outlook more positive, and that may bring euro for short-term up. But in the reality, from the terms of fundamental picture, the expansion in ECB's QE would make the euro depreciated. So not in the immediate effect, in the perspective of the upcoming trading sessions or days, I would expect, I would say that expansion of QE would finally lead to euro costing lower. So in case of euro dollar pair, it's more likely to expect a decline in its value. Main thing is not to get into the news trap during the press conference and suggestive announcement, as the automated algorithms may push the short-term value for the pair down really quickly for the upcoming hour. Thanks, Rob, for the further comment. I agree with you that currently ECB is feeling, I would say, in its current monthly without the opportunity to suggest a viable solution in facing the inflation below the target level and virtual absence of economic growth as a whole. So we are having ECB press conference in 10 minutes, and I have brought you to some market commentary. In case you've got some questions, it's high time to ask them before we've switched our attention to Mr. Mario Draghi. In case no questions, I wish you the profitable upcoming trading session. Please be aware of higher market volatility, which we are going to expect in the coming hour or two. And once you master your skills on demo account, it's high time for you to check its performance live. That's the right time when the broker Tickmill can help you. This broker offers you a classic account where you do not have to deposit as much and where the trading conditions are nevertheless great. In particular, Euro USD spread is limited to 1.2 pips, and in addition to this, there are absolutely no commissions attached to this account. By the way, Rob, what broker are you trading at the moment? Yeah, good choice, definitely. Okay, then. I would like to thank you for the attention. It's clearly a good sign of interest for you from you to uh, spend some important minutes ahead of a major fundamental event such as ECB rate decision. Um, I would be happy to see you next Thursday, where when we will be having the discussion for the Fed press conference. Thanks for the input, Rob, in particular, and trade profitably ahead. Bye.